All right, Evan, switching gears and talking about another big story in tech. We got news earlier this week that Snap CFO Tim Stone was going to be leaving the company. And I think this is one of the most dominant headlines that our readers and listeners probably saw this week.
It's pretty big news. I mean, they only poached Tim Stone away from Amazon back in May. So it's only been 8 months, and they got him with a $20 million pay package. So, he's giving up quite a bit by leaving so soon. That compensation package included $19 million in standard equity units that vest over time, as well as a $1 million grant that vested within 6 months. I think as of the last Form 4 filing, he still had 2.3 million shares, but there's a lot that he's leaving on the table. And it's never good news when you're losing 2 CFOs in under a year.
Yeah, he was there to replace Drew Valero, who left the company. And as a reminder for some folks who may not be as familiar with Tim Stone and his pedigree, he spent 20 years at Amazon before coming to Snap. Certainly not a guy that needed money, but to see him leave, 18 million, or I've seen some estimates at 16 million, he left a lot of money on the table, one way or the other, to leave, which says to me that he was not happy with the situation at this company.
Right, exactly. And I mean, we were talking about earlier, but there's a Bloomberg report also that, Stone apparently was interested in being real ambitious and wanted a promotion. He wanted even a higher pay package, and then he also wanted to be promoted to COO. And then he went behind Evan Spiegel's back to talk to the board, which of course Spiegel's part of. And apparently that caused a lot of tension between the two.
And that COO role was kind of vacant because Imran Khan, who was the chief strategy officer at the company, and I think was there for several years, left last year to pursue his own opportunities. I think he's working on some e-commerce startup. So he had left for some other opportunities. Stone, it wasn't clear that he was leaving for any reason aside from not necessarily getting along or not necessarily having the same vision as Evan Spiegel.
And Spiegel's management has been really kind of called into question a lot lately. I mean, there are reports that the previous CFO, Drew Valero, left in part because Spiegel was so obsessed with making spectacles, and the money and we've talked about spectacles at length on the show, like how they're just seem to be more trouble than they're worth. No one buys them, no one uses them, but Snap keeps putting all this money into developing and marketing and distributing these things. And apparently Spiegel was just so obsessed with this that Valero was really against this wasteful spending on hardware development. But, obviously that, we don't know the exact circumstances around Stone's departure now, but point being that I don't think Evan Spiegel is a great leader.
Yeah, I think a lot of people thought Stone was going to be the adult in the room, so to speak. The guy that at least got them on the up and up with their books, maybe got them focused on the right priorities and investing in the right places. For him to be leaving, I think does say quite a bit about Spiegel. It's also concerning because you look at their management team over the last 2 years, it's been a mass exodus. You look at their current executives and directors page on the company website, only Bobby Murphy and Evan Spiegel, the 2 co-founders, have been in their current positions prior to July 2017, and the company went public in March of that year. That really doesn't speak to this is a management team that people want to be a part of and are ready to work for long term.
Yeah, exactly. And there's also news this week that broke that apparently their head of HR had left back in November, but it wasn't reported until just now. So, I mean, if you're an investor, the 2 positions that are pretty important to you are the CFO and the head of investor relations. And with no head of IR and the CFO on his way out, that's a pretty terrible combination for investors in terms of corporate governance, investor transparency, and all these things. And speaking of investor transparency, Stone, to his credit, was the one that implemented financial guidance. So Snap previously never provided any financial guidance, which kind of left investors in the dark about what's going on, what to expect the next quarter, on top of not having any votes or any way to actually influence the company. So these are just a lot of really negative developments just back to back.
If there is a silver lining looking at the Stone news, I think in digging into what his comp package was, we can say that Snap as a company has gotten better at setting up their share vesting schedules. Because one of the big criticisms that we had of this company was when they IPO'd, Evan Spiegel immediately received what, like a $650 million share grant?
Roughly, yeah. That as a bonus for taking the company public, and then he had sold like $200 or $300 million in stock in the IPO. and then they just gave him another 600 or 700 million just for taking the company public. But certainly he's looking to enrich himself, but he might not be as interested in enriching
and
other people.
And that wound up being a very costly decision for them because they had to realize all of that grant immediately. It was such a large grant, they didn't have it vest over time, so it hit their books all at once. With this grant that we saw with Stone, I think it was in equal installments over 48 months or something like that. So clearly they're thinking a little bit more long-term with how they're giving executives their shares over at Snap.
Yeah, that one was definitely much more traditional in the way the vesting schedule is structured.